What is going on, my friends, and welcome back to another video on the channel. Well, in today's video, we are going over the crypto market as things are starting to look pretty damn solid in the short term, okay? So what we can see occurring at the moment is that the price of Bitcoin specifically did come down to this key level of support, which looks like our macro Fibonacci swing low to swing high 618 to 786 level. And as it did enter into this key zone, this green box, we are looking to see the support establishment, especially as we did near our previous macro low. As we can see, we did see this extremely weak bearish candle here, followed by our two massive green days, which are looking quite well. It does seem as if momentum did slow down as we hit this $40,000 level. We did see some mass accumulation at that point, pushing the price back up, sending it to then retest some of these key levels of resistance. So with that being said, it does seem as if things are looking pretty good in the short term, but I do want to go ahead and make it clear that we're nowhere near out of the woods yet, but we are taking some great steps in the right direction. Now, the reason that I say that is because we can see here that we have actually gone up on the 4-hour scale and set a new local high, and that's always important. So as you can see, before we saw this rather large correction to the $40,000 level, we put in this high here. Now, throughout that same time period, we did go ahead and go put in a higher high, while on our price, we are actually setting a higher high as well. And so considering the fact that we're not really seeing any divergence there and we are setting these new local highs, it definitely says that in the short term, we may continue this uptrend and that it may be the start of the reversal in which we have been looking for on more of a zoomed out macro scale again. So personally speaking, what I am thinking is that we are likely going to come back up to retest our downward sloping trend line that we've been trapped within since realistically the beginning of November. And I also will not be making personally any major purchases or doing any mass accumulating until we are able to see that crossing. Now, there's a few reasons that this specific crossing right here, which currently looks like a price of like $45,000 to $46,000, is going to serve as so important. Now, number one is because if we are able to do that, we will have also been able to clear our 20 simple moving average on the daily charts. Now, what you guys know is that we have a tendency, once we clear the 20 simple moving average, to resort to the top side of our Bollinger Band envelope. Now, at this point, if we were able to see a resortment back to the top side of our Bollinger Band envelope, once we clear this 20 simple moving average, which is running directly on our trend line here, that puts us back up towards this $52,000 to $53,000 level, which could give us the potential to see the setting of a new high above this daily level of resistance at $52,000, which could for sure start to be the confirmation we need for us to make the bigger move to the top side towards 60K. So it's definitely important that we're able to clear this 20 simple moving average as well as a downward sloping trend line, and they do just so happen to both be in the same exact area as we speak. Now, in the event in which we are able to do that, that will also help us prevent any type of negative energy that could come from this 50 through the 200-day simple moving average cross, okay? This bear cross, the death cross that everyone's so scared of for no reason at all. So we know that a lot of bear sentiment is typically followed with these. They do happen, to bring some type of fall sometimes here, and I think it's bullshit, and I don't really see a reason as to why people freak out so bad about them. They're lagging indicators, and I don't need any more confirmations that we've been in a downtrend, because that's realistically all it is, a confirmation that we've been in bearish momentum, basically because of our 50 and our 200-day moving average. Like, okay, we that's not new to anyone here, okay? And so what that means for us is that if we are able to start to make these moves through some of these key levels, especially downward sloping trend lines, especially the 20 simple moving average, and put some of those strong levels of resistance below us and establish them as support, even if we do see some type of drop off here due to this death cross, I do believe that will help mitigate losses, and we could definitely see the continuation of an uptrend even when this does happen, which would be quite difficult, but it is very possible. Now, another reason I believe that this move through this trend line and that through that 20 simple moving average would occur is because we're not seeing that same level of divergence in which we usually have been seeing over the last few months. Now, what I mean by that is realistically, when we would see some of these larger moves to the upside, we would see that followed by bearish divergence. Now, what I mean by that is we set this high here and we set a high here on the RSI. And if you look at its most recent macro high, it was here. So you can see we set a higher high on the RSI from 0.1 to 0.2. And here from 0.1 to 0.2, we set a lower high. And what that means is that in relation to the momentum, the price is not moving strong enough, meaning that the bears are continuing to be able to push the price down and the bulls bulls are starting to get exhausted. Well, what we can see now is now that we are starting to get some things like these bullish MACD crosses happening, we are actually seeing that there is a working in tandem between the price as it sets, lower high and still lower high. And at the moment we're setting lower high and lower high. So you can see that the price and the RSI are working in correlation with each other, meaning that the momentum is justifiable, and that the momentum that we're seeing right now isn't really, something that is out of control, and it's not something that we can't really continue. It is definitely something that we can see continue on into the future in a very healthy way. So considering the fact that we're not seeing really much bearish divergence at this point, considering the fact that we are approaching a key trend line and a key simple moving average, which is the 20 simple moving average, personally speaking, I am under the belief that this has the potential to be the move through that trend line that we're looking for. But with this bearish catalyst that we do have right here, as well as some information about inflation and CPI and all that coming out today, I personally wouldn't be doing any mass accumulating until we can see that move, probably up towards, $46 to $47,000. At that point, we would start to make many confirmations to the top side that we are making a bullish reversal. And then from there, I would start to look to accumulate either on Bitcoin or on our altcoins, as realistically Bitcoin does control both itself and the altcoin market as well. So that's my current play right now. That's exactly what I'm doing. We're not out of the woods just yet, but this is lining up to possibly be a massive move to the upside, and it is something that I'm going to continue to track and continue to update you all on. So definitely do stay tuned for that, of course. And if you don't want to miss the next video that could have some very, very important information about when some good buying opportunities could be, please just subscribe to the channel and turn on notifications so that does not happen. And you can also press a like on this video if you do think that more people should see it. But with that being said, that's going to be about it for today's video. Of course, I hope you guys did enjoy. If you did, you can always let me know by smashing that like button, and again, subscribing to the channel if you are new. And I'll see you all next time. Peace.